What's going on, guys? Welcome to the Geeky Investor, where stocks talk and we translate. Today, we're going to be talking about what is happening to the stock market and this massive news that came just recently. And actually, the stocks have been moving nowhere. As you can see right here, basically, the stocks are kind of, flat over the last few days, including the last month. And if you focus here, for example, on NASDAQ, so over the last 5 days, it's up almost 1.6%. But if you see over the last couple of days, it's kind of, moving nowhere specifically up or down. The same goes for the past couple of days. You can see here on Dow Jones the last 5 days, and then on S&P 500, if you see the trend on the last 5 days, maybe it's a little bit on the high side, but overall it's kind of going sideways. So what really happened and why the stock market is not really moving over the past couple of days? So before I proceed forward, please make sure you smash this like button, because it's really going to help the channel move forward, just like the stock market is expected to do so. So basically what happened is that for Q3 2025, US GDP has grown 4.3% annualized rate, and that is significantly above the expectations of 3.2 to 3.3%. So now 4.3%, as you can see here, I'm going to be zooming right here. So, right. So, all right. Excuse me for that. So basically what we have right here is the GDP of the United States of America from 2021 all the way into 2025. And as you can see, this increase of 4.3%, this is the largest increase for the GDP of the US over the last 2 years, approximately speaking. Maybe there was just one time here in 2023, but then if you go all the way back, all the way into 2021, after the coronavirus, pandemic, after that time, after that crash, we had that significant growth in the GDP. But since that time, this is almost the largest increase in the US GDP. Now, you would think that this is, great news for the stock market, and the stocks should be sky high right now. But look what happened. As I just showed you, the stocks are kind of, going sideways. And what is happening? So the strong reading points continue to for economic resilience despite high interest rates. And as we all know, interest rates are kind of as we all know, interest rates increase, or the Fed decide to increase the interest rate when the market is going well. But when things are not going well for the work and people, and the GDP is not going very high, the Fed would decide to decrease the interest rate so that people would work more and more. So now, since the GDP is going high, it is expected that the Fed will not cut the interest rates as much as they were expecting initially. So basically, as we can see right here, this is this is Jerome Powell from the federal meetings that we've all seen, and this is the website, so Trading Economics. And as we can see here, since 2023 all the way into December 2025, we can see that the interest rate has decreased from it reached 4.5% in 2022 all the way into 5.5%, and then now we're back to 3.75%, roughly speaking, which is really nice. And as you can see, over the last 5 years, it's kind of it increased after the pandemic, but now it's kind of cooling down. So people were expecting, or analysts specifically were expecting, that the federal rate would be decreased and slashed by Jerome Powell and his team. However, what happened is that the GDP was the growth in the GDP was strong, and that's why the expectations for the cuts have decreased. When you have less decrease in the interest rates, so you have less money flowing into the stock market, more money flowing into the bonds. So what happens to the stocks? They do not increase as much as you would expect them. So if Jerome Powell kind of surprises us and he decreases or cuts the federal tax rates by more than what the analysts expect, so we would expect the stock market to kind of shoot upwards, and that's what we expect. However, I'd like to say is that stronger growth has reduced expectations for near-term Fed rate cuts, and especially for early 2026. Although everything is still possible, but that's what's being cooked into the stock market and the share prices. However, despite all of that, we can kind of, look back into 2025. We can see, and actually, the stocks have really done well, and overall, the market have done well. So, for example, we're gonna talk about the silver right here. So, as you can see, this is the price of the silver all the way from 2008, that bubble that we had at that time, and then the crash. And as you can see, kind of since 2011, the silver price have not increased as much as of recently over the last just a year or so. And as we can see, this is the highest number that it has reached ever in its history, and now it's sitting at $71 if we zoom back, as you can see right here. So basically, this is the largest increase that we've seen over the last 20 years at least. And the same is also applying for the gold. So if you go down to the gold, right, the gold chart right here, and we can choose, for example, 12 months. And as you can see, the gold price have been increasing very significantly in a very, very nice manner. And now it is sitting at more than 4,477 US dollars, which is really great for the overall these commodities. And the same is also applying for the stock market. As you can see, year to date, so over the last 12 months for the S&P 500, from 1st of Jan 2025, we can see that the S&P 500 has increased by 18%, while the Nasdaq has increased by 22%, and the Dow Jones has increased by 14%. So out of these stock indexes, basically the Nasdaq have increased and performed the best, but overall we can see the stocks have performed really well. And we know that the annualized average for the stock market is around 8 to 12% on an annual basis compounded, right? So now a 20% increase or an 18 or 14% increase in the stock market is definitely better than the average, which is really nice. And we hope that this would continue for 2026. And actually, let me know what you guys think in the comments down below, if 2026 is going to be as good as 2025 or even better. And now, unfortunately, the same does not really apply for the Bitcoin and for the Ethereum. I don't know why Google is kind of putting it in this, but basically we can see here. So as we can see, so year to date, it has only increased by 6%. So it's not as strong as the other indexes, like the Dow Jones or the Nasdaq, but overall it's kind of increased. And the Bitcoin is kind of fluctuating throughout the year. It has increased and then decreased, but it's overall throughout the same price, which is 87,000 for the Bitcoin, and for Ethereum 2,900. Although over the past 5 years, as we can see the chart, it has reached 4,800. So kind of Ethereum is not doing that great when kind of compare that to the Bitcoin. The Bitcoin has actually even reached 122,000 just 2 months ago, and we've all heard the news at that time. And we're gonna see what's gonna happen with the Bitcoin and Ethereum. But for me, myself, I'm mostly invested in the stock market. So as we can see here, metals have returned very good results over 2025. 130% year to date for silver, by far the standout performer among metals. And then the gold 65% year to date, and copper 35%, boosted by industrial demand and record prices. And for the equities, as we just said, Nasdaq and S&P 500, and we also talked about the Dow Jones. And the crypto market, on the other hand, is kind of not doing as great as these other indexes. And I would like to hear what you guys think, if 2026 is going to be as good as 2025 or even better.